What asset are you most constructive on for 2022 and why? It can be a sector, it can be a single stock, it can be an asset class.
So I would say, I think that some of the even though the energy area might be overdone in terms of enthusiasm, the pipelines, many of them are still below their price level that they were going into the pandemic. They're less concerned with price and more concerned about volumes. And so I think, a lot of them yield 6, 7% or more. And so even if they go sideways for another year, I think that that could do very well compared to the market if the market goes sideways and pays a lower yield. And so I do like some of the higher quality energy pipeline companies. I also still like, some of the healthcare companies, either diversified pharmaceuticals or some of the insurance companies. I think those are reasonably attractive in this environment. One of the catalysts there is that there was a lot of impending regulation that might have suppressed some of their pricing power, and that's kind of in doubt right now based on what's happening in Congress. And then after 2022 midterms, that could be further de-risked. And so the market started to price in kind of a more mild kind of legislation move against them, and now that might does not have any legislative move against them. So it remains to be seen. But I think that there are areas like that are pretty attractive.
How are you thinking about banks? Banks obviously do well when yield curves are steep, when rates all across the curve are high. We just a few days ago had JP Morgan, Goldman Sachs report earnings. Market didn't like that too much. It seems like the music is slowing when it comes to investment banking revenue and that sort of stuff. But we had Bank of America report today. It seems like consumer lending is we could be at the beginning of a credit cycle. So how are you thinking about the financials? You mentioned insurance that's related. Whether it's the investment banks or the sort of brick and mortar banks like Bank of America.
So I'm neutral on them. I think that they because they generally pay decent dividends because they're able to buy back shares with all their profitability. I think that could give them some support in what could otherwise be maybe not the best market environment. On the other hand, the fact that I'm kind of temporarily going over, with my deflationary friends and saying that, because we have slowing growth and because we could have this kind of year over year peaking in headline CPI, that's not necessarily great for the yield curve. And so I'm not kind of pounding the table on bank stocks, but I'm also not kind of running for the hills from bank stocks. It's not one of my high conviction areas at the current time. It's obviously it's part of the more cyclical value camp, and so for me, I'm kind of neutral on those. I would say that if I was long, I am long banks. But one way to hedge, I think, long-term risk with that is to own Bitcoin, right? So for me, it's not any one asset. It's, I like energy pipelines, I like healthcare companies, I like Bitcoin, I like some of the banks. And then even with technology, there are still ones that I get into. I'm just more selective and very cautious with my valuation and growth assumptions there.
Yeah, I know when it comes to non-US stocks, you're very active, and often your analysis is more about the micro than the macro. But how are you thinking about emerging markets as well as Europe, China, India, and how do you think that these sort of equities will perform?
So I'm moderately bullish on emerging markets as the world kind of moves past Omicron. It's not all at the same time. And so, for example, India is still in their upswing in terms of Omicron. But as the world moves past Omicron, I think that's probably constructive for global growth. We also see that China is on a different timing sequence than the rest of the world. So most countries have their PMI rolling over. China's has already been weak. Their credit impulse is rolling up, if anything, early signs. And so that could benefit either Chinese equities, maybe outside the real estate sector, because I don't particularly want to touch the real estate
Yeah.
sector. But it also can buoy the rest of emerging markets. And so sentiment on Brazil's been very poor. I think we're seeing initial signs of that trying to bottom, that market trying to bottom. So I think investors should have Brazil on their radar. And so I think that broad emerging markets, if you get that weaker dollar environment, which is not guaranteed, but I think there are some catalysts in place that could, either weaken the dollar or at least maybe prevent it from strengthening too much. I think that's kind of an interesting play there. So while I'm not necessarily pounding the table on emerging markets, I do think that their stretch of underperformance might be behind them, and that they do offer some better valuations, some better growth, and that overall I think that they're at least a place that investors can look through. I'm rather, I'd say I'm moderately constructive on emerging markets.
Okay, now the reverse. What asset are you the least constructive on, the most bearish on for 2022? Is it the mega cap growth? Apple, I know, is not exactly a favorite of yours, or is it ARK, the speculative growth stocks, or is that sell off overdone? Is it bonds? How are you sort of thinking about the thing you're most bearish about?
So I'm concerned with some of the mega cap growth, and I think Apple's an interesting one because I mean, if you look at their analysts are expecting single digit growth over the next couple of years. So it kind of has it's like a value stock trading at growth stock valuations, and it's the largest stock in the index. And so when I look at mega cap growth, I kind of separate out the different companies. So for example, I'm not as bearish on Amazon as I am at Apple at the current snapshot in time, for example. So I am concerned about some of those, Apple, Costco, maybe Nike, Nvidia, some of these kind of very large cap growth equities that I think have gotten ahead of themselves in terms of valuation. Um, and again, you could still even go up, and just I think it goes up less than it has been before, or you could go down quite a bit. And so it's not necessarily a call on direction, more just like a call on I don't like the risk reward ratios of owning a lot of those mega cap growth stocks. Other than maybe on a selective basis, if there's, if one already consolidated for 12 to 18 months, like maybe Amazon has, I'm less concerned about that one than maybe some of the others. That might or may not be right. So the ARC stocks, they've sold off so aggressively that if anything, they're actually there's some that I'm kind of watching for bottoming opportunities. Um, you know, earlier in 2021, Kathy Wood was appearing on magazine covers. Everyone was kind of super bullish on ARC. I was concerned about valuations. Um, when that started to roll over, I kind of got in a little bit too early, and there are a couple growth stocks in there that I picked through and I liked. But I think the more that whole sector capitulates and people kind of make fun of ARC, that's actually when I want to start looking at some of their companies. So I actually do have some of those on my radar for potential bottoming opportunities. Going forward. So I think my biggest area of concern is probably at least a subset of the mega cap growth stocks.
And Lyn, right now we're in the thick of earnings seasons reporting Q4 2021 earnings. How are you thinking about the next year of earnings? 2020 obviously saw earnings take a huge hit due to the first COVID shock. However, multiples skyrocketed, so stocks actually went up. 2021, contrary to what some people think, earnings went up, and they went up so much that multiples actually contracted. So stocks became less expensive, if you can put it that way. How are you thinking 2022 will be? Will earnings be above expectations, right there in the middle? And then what do you think was going to happen to the multiples?
So I'm expecting probably somewhere in the middle. It's not a super high conviction, but I think that the spread of positive surprises is probably behind us. And so whether or not we're mildly above expectations or mildly below expectations, that obviously depends on a lot of factors. But I do think that in rate of change terms, the spread, we're going to be less surprising to the upside than we had before. And so I think that, should give us pause again around some of the broad indices. So again, when you have kind of declining PMIs, when you have these other kind of risk-off factors that are kind of, flashing their warning signals, I'm not super bullish on some of the earnings outcomes, even though I think that, again, some of the sectors could continue to surprise me to the upside, and that, they're priced in such a way that I'm willing to go through some of that choppiness for some of the say the growth at a reasonable price companies, the high quality value stocks, the good dividend pairs. I'm willing to kind of go through any sort of choppiness that they have.